Nvidia is the talk. It is the stock this year. It is up year to date, 216%. Last week, they reported earnings. They absolutely crushed revenue, crushed profit. They were up after market to $5.15 per share at one point. But guys, weird thing has happened. It finished even that day at 474, and now it's down to 454. The Nasdaq is actually up today, and Nvidia is actually down 1%. So in this video, we're going to go through some news, bull and bear cases, some analyst estimates. We're going to go over a couple comments, a comment that we received on our last NVIDIA video. So we like to engage those things. So in this video, we're going to have things for beginners, something for more advanced investors, and everywhere in between. So no matter where you are on the spectrum, stick with us, watch this video. We will finish it off with what's probably most on your mind, which is what price to pay for NVIDIA stock. So let's get started. Again, the stock is down about 1.2% right now. Our all-time high is based on intraday and closing, and it shows 502.30, but that is not true. The actual after-market high was 515 or so. Can somebody find out in the video, put in the comments below what our actual all-time high was, including pre-market and aftermarket. So some news on NVIDIA. One of the biggest things they're doing, guys, is they're planning to triple the production of its $40,000 AI chip. Triple. That is how they were able to crush their estimates. And they guided. First, they were guiding $12 billion in revenue for the quarter. They increased it to $16 billion. So guys, begs the question, why is the stock down from that high of 515? Now, that doesn't mean the stock is going to, things are fluctuating. This could be an overbought stock that just needs to take a breather. I have no idea, but it's quite interesting. Now, market cap of $1.12 trillion. That means if you bought every share outstanding, this would be the market cap. Interesting. Enterprise value is 1.13 trillion. This difference right here is essentially their debt. This company has like zero debt, and that is awesome. It is just like you guys at home. If you have no debt, it's going to be very hard for you to go bankrupt. It's going to be very hard for NVIDIA to go bankrupt. They've been around for so long, and they make such a great processor for their graphics cards and everything. One issue I have with NVIDIA is they're always jumping in from market to market. So one of the bear cases for NVIDIA is their automotive section, which alone was supposed to be $1 billion a year revenue business, is now down 15%, quarter over quarter from last year. Sorry, quarter over quarter. That's a lot. That's a lot, guys. I worry that NVIDIA is always jumping. It was first crypto, then it was this, now it's AI. And it's like, okay, they make a great processor for video graphics cards, and that's not going away, but it's jumping from market to market on whatever's hot. That's a good thing also because they're able to change very quickly to adapt to the market. I also like companies that like to focus. Again, maybe I'm being too picky about NVIDIA, but this is something that's an issue. Another thing, their price to sales ratio has fallen to 34 because they crushed their revenue so much. Now, one of our comments from one of our users on YouTube, at DiddyAg13, wrote, if you base it on next year's numbers, their price to sales ratio is 15, not 47. Because last week it was like 47 before including the previous quarter's revenue. Fair enough, and he has a valid point, but 15 is still expensive. So price to sales ratio takes the market cap of the company and divides it by its revenue, all right? Let's go look at some companies. Microsoft, which I think is overpriced still, is selling for 11.3. So 15 for NVIDIA is still high, and the difference is Microsoft's gross margin is 69%. Now, NVIDIA reported 70% gross margin this last quarter, but before then, it was in the 40s. So that's a big price to sales ratio. Let's look at Apple. Apple's price to sales ratio, 7.3. So even at 15, it's double Apple's price to sales ratio. And I'm not buying Apple at 179. So these are things to consider. And I also find it that when things are overpriced, people start to look in the future more and more like, well, yeah, but if you take this next year's or 2 years from now's revenue or profit, it's pretty reasonable. Yeah, but they still have to earn that. Don't pay them today for what they're going to do in the future, right? You can to a certain level, but you still have to be conservative. You have to have a margin of safety and make sure that the company can actually hit those targets, okay? That's a big thing here. Now, Some big numbers here for Nvidia. 42.8% price return on invested capital. What does this mean? This means that the money that's invested in the business gets a very, very high rate of return. This makes it possible to really grow earnings a lot faster. So when they report these really high revenue numbers, they're getting a big amount to the earnings per share. That is huge, and that is awesome. That's going to help drive the earnings per share for Nvidia. You want to buy companies that have high returns on invested capital and can also reinvest at those high rate of returns. So if Nvidia starts building more and more factories, they can make a lot more money. I don't even know what the profit margin of those $40,000 AI chips are, but that's a huge, huge potential. Now, a bull case, 101% year-over-year revenue growth and increased guidance from 12 billion to 16 billion in terms of revenue. Like I said before, another bull case, they're aiming to sell 550,000 H100 chips at an average selling price of $30,000. Similar chips in China retail for $70,000 each. So they're not only the leader in that market, but they're also the cost leader in that market, the price leader. Pretty awesome. Now, my biggest bear case for Nvidia is right here. Jim Cramer. On August 23rd at 5:44 p.m., Jim Cramer wrote, Nvidia, own it, don't trade it. This is the kiss of death, in my opinion. Jim Cramer is terrible at investing. Okay? So he said to own it probably means something bad's going to happen. I'm being somewhat funny about this, but it's not 100% true. And guys, thank you for your patience on this. Since Mo is out of town, I have to look at all the things that he was going to say. So let's go look at the 8 pillars for Nvidia. Our 8 pillars for Nvidia. Guys, remember, if you have our software, you can customize your pillars up to 12 different pillars and 4 quadrillion different variations of it. So guys, the 8 pillars for Nvidia right here. We have 5 checks, 3 X's. I'm not worried about the shares outstanding being up slightly, 1.85%. That doesn't bother me. This bothers me more. 5-year PE and 5-year price to free cash flow, 180 and 180. Now, keep in mind, these were well over 200 just last week. Nvidia is growing their profit big time. The question is it sustainable? That's what's important here. You have to understand if this is sustainable, if it's not just some temporary boost in the meantime. This is the question here. And this is what's not scariest about Nvidia, but it's a very big potential. So you have to sit there and say, am I going to pay too high a price for that growth? Growth is awesome, but if you pay too much for growth, you're going to lose. That's the big key there. With Nvidia, that is the question I'm going to ask till I'm blue in the face. Can they grow into this value? And even if they can grow into the value, does it mean there's an investment opportunity in there? So even if Nvidia gets down to 5, 6, 7 times sales, how long is that going to take and what price are you paying to get there? Are you still paying the same price today and you have to catch up to it? Because in order to get to 5 times sales, they're at $1 billion. You have to have $200 billion in revenue. That's going to take some time. I don't know how much time, but it's not tomorrow. Next year's estimates are $80 billion in revenue, potentially, according to our YouTube user who commented. Is that going to happen? I don't know. We don't know what the future holds there. We like to encourage a margin of safety. Every investment's a present value future cash flow. And that cash flow can grow like crazy. But if you pay too much for that growth, you will lose or you won't make as much money as you think. That's the big key there. All right, let's look at analyst estimates. So here's what's interesting. I don't know how often these are updated, but they're expected $3.33 per share in profit for 2023, going to $13 in 2028. Guys, even at $13 in 2028 at $4.50 a share, we're still at 32 times profit for 5 years from now. Seems like a lot. And these are analysts here making this estimation. Let's look at the revenue assumptions. So analysts haven't updated in the last, this probably hasn't been updated from our soft, but look at this. We actually have more analysts projecting out next year than this year. 27.5 billion from last year. This next year doing 44 billion all the way to 71. So who knows really if it's going to get to $80 billion. That's something to go look into further. If you're in our community, Start this conversation. What are you guys finding in terms of revenue potential and earnings potential for NVIDIA going forward? Remember though, I strongly encourage you, even if they have a lot of growth potential, is it worth the price paying today? As our good friend Professor Athwa says, a story without numbers is a fairy tale, and a number without stories is a spreadsheet. He's absolutely right. It's about merging those together to figure out where the story and the numbers make sense together. That's what's important. That's what we're trying to teach on this channel, is that process of merging those two things together. A great story. Two companies are exactly the same, but one has a better story and one has better potential. You should pay more for. It doesn't mean you pay any price for it. There's still a price to be paid that is too much for a good story. Look at if you're a baseball fan, look at Ohtani. They were talking about $600 million contract for Ohtani. Now all of a sudden he's going to have his second Tommy John surgery, and they're saying now that it'll even be hard for him to get $500 million for his next contract. Still a lot, but it was a shoo-in before, and now it's not. The same thing happens with companies. Actually, it's probably more likely with companies. So guys, it leads us to our final question. What's the appropriate price to pay for NVIDIA stock? And that's why we have our stock analyzer tool. This tool allows us to take every information on what we perceive the future to be. This is a future look. We're doing a 10-year analysis. We're going to put in revenue growth, profit margin, free cash flow margin, assign an ending PE and price of free cash flow, and then what our desired return is. And it'll spit out, not including the balance sheet, what price to pay for the company. And that's really, really important for you as an investor. So I'm going to go through this. Now remember, if you like that, this was used over 2 million times, and we have so many other tools on the software right here. Retirement calculator, analyst estimates, 8-pillar search, 8-pillar portfolio, real estate calculator. And guys, the real estate calculator, if you sign up now, you get this for life. This is going to be split off into its own software, be sold later separately. But if you sign up now, you get this for life. And of course, our community of like-minded investors, thousands of people talking every single day, exchanging messages, because the hardest thing about investing is being on this lonely road alone, right? This community allows you to be with like-minded investors that help you repeat over and over the reasons why we have it. I love it in the community when people take screenshots of their stock analyzer tool. And guys, this is all available on your mobile phone as well. So go to everythingmoney.com, sign up. It's just $1 a day. We're running a special, 20% off right now. Sign up. You will not regret it. It'll change the way in which you do investing. So let's make our assumptions about the future, but I'm just going to pull up our most recent NVIDIA. We just did it on the 23rd, which was 5 days ago. I'm pulling it up right here, our very last one. And they did big numbers here. But remember, it can justify big numbers. But 30% growth rate for 10 years is my high assumption. 30% growth rate for 10 years. That makes their revenue 14 times higher than it is today. 14 times higher. They just reported in the last year $32 billion in revenue. That would take them from $32 billion to about $450 billion in revenue. Keep in mind, Intel does about $55 billion. AMD does, what does AMD do? They do $21 billion. Amazon does about $560 billion. Amazon does 560. So this would make them bigger than Amazon in the next 10 years. Is it possible? Sure. I don't know what the future holds, but is it probable? That's the question I ask you. All right. So let's pull up this, the NVIDIA that we did, 10, 20, and 30% revenue growth, profit margin of 20, 30, and 40%, free cash flow margin of 20, 30, and 40%, which by the way, look at this, guys. They haven't even beaten 30 in the last 10 years, over a 5 or 10 year period. I'm going to go 40% this high side. PE, I'm assigning a very high ending PE. This is the PE and price of free cash flow that they think the company will sell for in 10 years. 20, 25, and 30. That requires a massive moat. But I think if they're able to do this, they will have a big moat. And finally, guys, I actually put only a 10% return. What is this company worth? Just matching the market. Because over long periods of time, in a long-term ETF, you should be able to get 9 or 10% return. So what is that? What's the value of the company based on just the market value right now? Boom, guys. Low price of 75, a high price of 950, and a middle price of 290. If you pay today's price and the lowest assumptions occur, you're going to lose about 10% a year. If the middle assumptions occur, you're going to make about 5% a year. And if the highest of high assumptions occur, you'll make 19%. Guys, for me, it's a little too risky. Go to everythingmoney.com, sign up $1 a day, get the software. You will not regret it. Thank you for your time.